Sorry about the break in transmission. The network just failed. There is a short video which you must watch before this one. Before you continue with this one, you must watch that short video. It's a continuation. I think it's actually less than 5 minutes or thereabout. So before you continue with this one, I will try to label it as one before you pick on this one. So what was I saying? I was trying to say that when you watch the video and you like and you comment, it's good for the progress of this all, and you share also, and we can have, you can grow a community so that people can get to understand, you know, what I'm doing. People don't offer it for free. You can take a course, you know, on wave analysis and structure and all of that, and you know, but to take you through live course like this, you know, people don't do it. And again, I want you to know something, that when you know this market, you know about it, you know how to deploy, you know how to also read it like I do, you will find out that the big boys that controls the move, they are not even your enemy. Your enemy, those that want you not to succeed, they're actually your brokers. They are your brokers, because when you see charts like this one now in front of me, it's index. So you can have Ohando, you can have Capital, you can have so many of them. You will find out that your brokers actually are your enemy, because they distort the candle, the direction and the structure eventually will still be the same, but they can manipulate, like this candle now that you are seeing here. So it's the handiwork of your broker to actually knock you off, you know. And when I give you an entry, I mind what the brokers might do. When I give you a stop loss, I mind what the brokers might do, which is difficult to do. The entry, the stop loss, and the TP, I mind what the brokers might do. You know, you try to, you know, make sure that you have an entry. You try to make sure that you have an exit with their own game also. You know, the brokers, they make money if you lose, they make money if you gain, but they make more money when you lose. That's what the brokers does. And the last day of each month, actually, or the last week of each month, it's when the brokers begins to toil on your emotions and try to make something of you. But when they play their game, we know that they play the game. But when they go outside, you know, what is allowed, you know, we call a foul. You know, something happened, you know, during the week. You know, I was in a trade, and it's AUD card. Of course, I didn't call you the trade, I did it. And I had two positions, and I discovered, you know, my stop loss was on 0.90450. And I discovered that I was taken out. And I had to now send a strong, you know, message to my broker, say, okay, it's like you guys are all just hell-bent on making us losing, because with all that we know and equipped, it's like you just play a funny thing. So, and they said, okay, they are sorry, but they're going to get back to me. I'm still waiting for them to get back to me. I did them a mail yesterday, you know, because their spread on that particular instrument was 2.6 pips. So if your spread on an instrument is 2.6 pips, and I checked about 10 platforms, and I saw I entered at, you know, my analysis was on 0.90300. So I entered at 0.90250. So, and I gave like myself a 20 pips stop loss, because I was just confident that that is what I want to do. I gave myself a 20 pips stop loss. So, and 250 to 450. And when I check all those other platforms, there were ones that they were in between 282 and 292. No, 288 and 292. So that the space of their candle and their wick and all of that, 280, 288 to 292. So it never touched 300. And I did that because if it didn't touch 300, I might not be drawn in. So I gave myself 250 and I was drawn in. I was clever enough and put the stop loss at 940, sorry, 450. And what did I get? They took me out. And I sent a strong signal to them. I said, why would you take me out? And I cited those other 10 platforms that I watched, you know, their candles and all of that. I said, why did you take me out? 15.8 pips difference. That's 15.8, not even your 2.6 spread. And that is to tell you what, you know, the brokers, what they do on some commodities. So you have to know this, that your number one enemy are your brokers. And you cannot imagine if you're not even equipped, as well equipped as myself, and you're just trading, there's no way you'll be making money, you'll be losing it. And for me, I've not been losing money like that. So, and it's because I try to see what they want to do and how funny they can be. You know, at times it's because you don't understand the structure. That's when you lose money, really. But when you understand structures and you understand wave and you know this is the direction you should expect, you shouldn't be losing money. That's what I'm saying. You shouldn't be getting money. So you can be tight as on your stop loss to say, okay, when the analysis is wrong, I think it's wrong, then you have to look at it again. Enough of that. Enough of that. I'm just giving you that gist. Now you understand clearly what this structure is all about, because somebody, you know, send a message, are we still in a sell? The majors against the USD, are we selling, or are we still going in the line of the strength of the dollar? And I said yes. And I said, have you been watching the videos? I don't know if you watch the videos or you don't understand the videos, which I want everybody to. If you have watched my videos in the last 8 weeks, these videos are enough to even make you a master. They're enough to make you a master. So let's just get back to it. I told you about the structure, which if you watch other videos, you will understand what the structure we have in front of us is. Clearly a 5-wave structure, a 1 and a 2 and a 3 and a 4, and we are in the last wave. And I told you within the last wave, you must understand the internal architecture of the last wave before you deploy into it. And that is what we are going to see. And I will be jumping because I can, so you understand this structure very well. So we are within this last wave. And if I bring something out for you to see, yeah. So this is what I did, the labeling, the 1 and the 2, the way we had A, B, C of this wave here to finish 2 to 3. And after 3 here, this is the 4 of the 3, and this is the last of the 3, and we had another A, B, C, and all of that. And I told you in the video that when it comes to the lower time frame, this ABC structure, you might not even see it, it might not be apparent until you go to the smallest time frame. So, and I said, according to this wave that we have here, where do we expect this to terminate? And we told you, I told you that if this is wave 3 to 4, then we don't expect it to terminate beyond 161, sorry, beyond 161.8. That was what I told you. So we take it from the edge, of wave 3, which is really here. This is the edge of wave 3 here. That's the highest point of wave 3. We drag it to the lowest point, which is 4 here, where you see this black here. And we look for 161. So we said 161 is right on this edge. So anything between 123, 1.236 to 1.618, it's where you, so it's falling here. So you know how we got that we should expect wave 5 to terminate here, and this is a blue box. Now because it's a blue box, does not mean that you just jump and once you enter, start selling. I've said it. You still have to understand the structure, because there'll be to and fro movement, trying to do the last correction before eventually they move downwards. And so the blue box area, these are the areas that we might be looking, the upper portion of it might be looking for cells to say, okay, they're going to finish that structure. The structure has not finished. And so we are in the process of trying to move to and fro to finish that structure. So let me just go back to it now. So we are within that structure. So we are done with all of this. Then we know what the limit should be. Now, the question we should ask ourselves now is that, now, we said that on the daily time frame, we are correcting wave 4 of this particular move now, not the cycle. The cycle move, we have used the cycle move to know where this thing can extend and can, you know, do a trend change now. But within this particular last wave, which is the wave 5, the wave 5 also will run in 5, 1, 2, 3, 4, and 5. Also, and we believe that we have done 3. So we believe that this is the 3, the third wave here, which completed itself. So we are doing wave 4 of the major of this particular one before we now finish up the last wave, which is wave 5. Now the question is that, are we done with that wave 4 of the major? Is it the end of the major here? Let me switch to the daily candle. If you don't understand, you tell me you don't understand so I can clarify. Now, this is what I'm talking about. So this is wave 4 of the major. And the way I draw it, this is at 23.6 and this is 38. We are thinking that it should be deep enough since it's a major 4 of that entire wave, that it should, you know, come, there must be a momentum that divergence on the 4 to now give you 5 to come towards this place. And I, for one, will think that it's a suspect if we don't have enough divergence to come towards this level, that this is rather too shallow for us to say it's a 4, we have finished a 4, and we are going to 5 to finish this structure. I've said this. It doesn't make a clear sense. I haven't said that the probability of them doing that to have a shallow 4 to finish up is also there. But, you know, the most sensible things to think is that they might still run a major 4 towards this level. That's the most sensible things to think. And I don't want to think that, oh, they are running a 5th wave up now. We think in terms of possibility, probabilities, what they can do and or not do. And we said a 23.6, a 38, and a 50. Once we cross this border, we know, yeah, but it will be too late for you to catch anything here. You will have missed a whole lot of over 1,000 pips locked in between here before you know that anything has changed. Yeah, so why are we learning? Why are we doing this? Now back to this. So we said this is a 3-5, which has completed the move of 3 and a 4. And I did tell you that it could be a WXY, and they can change that. The last written video was particularly made for you to understand the concept of WXY and ABC. I did that for you to understand WXY as different from ABC. And I said, in a WXY, we don't expect too deep correction in the WXY. It's going to be shallow to fall back to a Y. But in an ABC, a B wave can be shallower, might not reach the end of A, or might even pull outside the end of A. And I said, once you have that, and it's not a WXY anymore, it is not a WXY, then we now look at where the leg B can be. And I now told you that if you take this one as a W or potentially an A, your X, if it's going to be XY, WXY, it should not go beyond 61.8 or 85.4. And And I said, once you see a break out of that, then it is not a WXY anymore, but an ABC. So looking at this now, we were expecting a WXY, and this is 61.8 that was trashed. And this is 76 was trashed. And this is an 85 that was also trashed. Now, this is 90. So, and I was telling you, if you watch that video, I said, once it gets, there's no difference to me between 85 and 90. Because if it is 90, it will only make it what? A regular flat. Then it can now be, once you, because it won't make a whole lot of difference between 90 and an 85 to me. At 85, maybe it's still WHY, but once it gets across beyond 85 and it's 90, then it is an ABC. But between 85 and 90, not much difference to me does it make. So in terms of looking at the structure and the possibility of we having a very deep leg coming close to 38, and I said it's either it becomes a running flat or an extended flat. And I said, I won't take the option of a running flat, because in a running flat, yes, B will run beyond A to the upside, but the recovery leg of C, you know, will stop at about 100. So that one does not make any sense to me. But I would rather prefer it to be, if it's an extended flat, if it's an extended flat, then you now expect that it's going to run to 123, which will be deep enough to still make up for this recovery and create the divergence that we want to expect on wave 5, which is the last leg of this wave. And that is technical analysis and all of that that you know about wave and what you should expect. And that will now tell us that now we are ending, and indeed, US dollar is getting weak. So with what is still playing out, I'm yet to see that confirmation that US dollar is getting weak, even though technically we are within the ambience or where we expect it to go weak. So I still need something to talk to me that the divergence is there, and we expect this last wave to now clearly show me that divergence. So that divergence is going to now make dollar weak. When it gets weak, dollar is going to fall and the wave is going to come down here. But that does not now mean that ultimately dollar is going to fall, Yakata. No. The weakness will create a divergence, and that can take close to maybe 500 pips or more, or 800 pips. Now, before the last ride from dollar to go up again, to probably close up. And when you see that, if you don't understand the wave, you think, oh, dollar is back with strength. No. So dollar will make the last rally to relinquish position and said, take over, my life is spoiled, and it's going to plummet. But now the first thing we want to get is dollar to grow weak to create that divergence before the last ride up. And that's going to take time. It's not within 2 months. It's not. So you should understand structure. You should understand how this thing plays. There's no joker to it. We try to see what they are creating, and we try to interpret. Now, this is not WXY anymore, since that has been taken out. It is an ABC structure that we are seeing now. It's an ABC structure that we are seeing. And like I said now, even 90 has been taken out. There is they call it force breakout. I didn't understand that. There's no force breakout of anything here. They are creating a structure. They can get there and pull back, and you think there's no force breakout anything here. So now, clearly, if you can see from your screen, wherever you are in the part of the world. So this is 90, this is 61, is out. I'm taking it out. And this is 76, I'm taking it out. This is 85.4, I'm taking it out. It's out. So I'm not thinking of that anymore. And this is what I gave myself, I'm taking it out. Price is not going to do that. So that blue box to come down is off. That's how to engage it. Now, because I'm thinking, okay, let me take this one back because I must still need it. Now, let me now drag this down for you to see where we think we want to go. Where we think we want to go to have a B is either if you come to 23, 123, that can make it an extended flat or a running flat. So I would rather prefer an extended flat can be at 123, at 141 or 161. It can be there. So, but I would rather take a chance at 141 now. At 123, it can be an extended flat or a running flat, but an extended flat will do it for me. So now doing that, I will still take this one off now. So what we are expecting is that this price is going to go. And again, they have given you an expo to have done this correction. I was expecting they might do any correction anyway. So when you see this, some people will say, oh, yes, the highest, which is the resistance here, the price is now hitting that resistance. And so what they're going to do now, they want to go down. They're not going down, they're not selling. The dollar is not getting weak now. This is a correction. It's a corrective move to tell you they want to break above here. You know, that's a kindergarten stuff now. You know, when you know it, then you know it. So they are correcting to break above here. And probably I didn't want to be here. I want to stay around this place to take a chance at this few pips area for a further downside to come back to C. So if we are going to see that, if you want to measure, if you want to stay with a running flat, of course, can be from 23 here down to A, back to the beginning of A, which is at this yellow. Now, a running flat will be at 100, which is a bit here, far away from this point. And if it's going to be an extended flat can still be here. From that 123, it can still be at this level, very close to this line. So, but if you now take it a bit up to 141, and it goes up here, and we now have this reaction here. So you can see that the 100 will fall where I have this green, and the 123 will fall a bit below, which is still allowed. So a 141 looks more like what will give us where we want. So, and eventually we might be now getting a reaction around this area for a further push up from the dollar before eventually it grows weak. So that's what we are saying now. So, but what I'm saying now is that I expect a reaction for further downside around this area from the dollar, around that area. Okay, or I can use a red for that. Yeah, so around that area, this is where we expect the B to be. We expect the B around this area, but of course, not beyond this blue. It can pierce this and get to this place. You must understand this thing. You know, you must understand it. So now with that said, even at that, and if the price is going to even begin to fall at this level of a B to do this, it doesn't mean that to me that we have finished 5. I'm still going to write it. So it's a two thing. We can look at it as a B that is going to C. You can even look at it when you get a price action and see, oh, we have finished the whole of wave 5 and we are coming down. What will now make a clear difference here that it is not, it's still 4 wave that you have finished the last leg, and it's not that you are changing trend, is that you are going to get a reaction before this area to do more upside, and that will now break or might even break this level above and come here very close to that place. That is what you do. So anyhow, you are still game to sell this as a B2C or as the end of wave 5, if you understand what I'm trying to say. So, but you must have that possibility at the back of your mind that it's a C or it's the end of the wave completely, but I won't take it as the end of the wave completely until I see a break outside of this area. Now, I'll still take it as a C that I'm still going up one more time. And the only thing I will now do here, once I see a price action, is to give it a very small stop loss to say, okay, you're not going to eat me, you are going back up. And once they begin to move back up, then you should know that, yes, they are making a big move up. Even the internal structure of the wave will tell you if it's a 5. Because if this one should come down again and break this structure to the downside, then this one will not be, you know, what you think it is to the upside anymore. But for now, let's stay with this, what I've said. Now, let me now go to where we have done, I've done a bit of analysis, because this is just, this one will not give me a 4-hour. You can see the 4-hour is not reflected here on this broker. So let me just, I just use it because I don't have much drawing on it. So let me now go to where I have my drawing. DXY is the basis now for, you know, what we want to do. So these are changed, and to me is narrower. But let me see the reaction here. Before I narrow this one, I pinpoint it and I can pull it down a bit. Let me just get to the reaction up here. But we know what is happening here. So what we are saying is that, see, it is still there. That I've marked it that this is what we are expecting, you know. And again, if I pick this one out, if I pick this one out, come back here again to the end of the beginning of A to the end of A, it's not WXY anymore. So this is 141, which is still 123, and it's perfect. And this is the last place, which is the red. It's perfect. So it's still holding. It's still holding. That is still holding. So that point is still holding. So if anybody want to take the chance to sell from here, you want to sell at the upper edge here, which is 141 to sell, and you expect it to go with. And once we are done with this, price will not just break the structure and make nonsense of 81, 85, 70, 61, 80, 76, 85, and 90 for nothing. And you think, oh, this one, no, this is where they are coming to. And if they break 141, then expect them to come to this area. And that will be huge coming downstairs. I mean, they are going to probably break the whole of this. So that might, for me, once they break beyond here, 161 of this entire structure and this entire aaron, and they break above it, then I can now tell you this is not the structure you are picking. So it's like wave 5. That means they are doing wave 5. So if they break above here and they come to this edge, then it is nothing but wave 5. So between here and here still tells me this is a B to come back to C. So it's really easy. It's knowledge that once you don't have much knowledge about these things, then you don't know what they are doing. So let me now break it down to what again you can do. So I will be making it very fast now. So this is the extent of their pool. This is the extent of their, this is 90, they have broken 90. So this is what they have done so far. This is what they have done so far from that place to that place. So another thing to do, if you are selling, if you are buying DXY, you want to stall at 123 of this pool or 141 of this pool. So what would that be on the 4-hour? Even if I go to the daily, it will still be the same. Let me go to the daily so that you can see it more boldly before I tell you the structure that we are seeing in that area. Let me enlarge it. So I have the lower limit, the correction is done, and you can see that hammer the way it's going up. So where I want to exit should be 123 of this move, this particular move, or 141. So if I do that and I come to it, I do this and I come to it here. So 121 of it, 141 of it is here, and this is the 161 of it actually falls at the edge of 123 of the old move of this one. So I think 141 is still a very good place to exit, to be clever, and now wait for reactions around this area. I'm just using this as a correction. So I will tell you more of it. Let me just scroll down on 4-hour. With what you see on DXY, you just use that, you are applying. Now, what is this move called? What is this move called? When you have a move from here to this point, this is your A move, and this is your B, and this is your C to finish this move. Your A move, your B, then you now have a C that runs 1, 2, 3 to finish that C before you now have a move to the upside. That's the correction. So if we take that to Euro USD, now I'll be showing you what I've marked on Euro USD. So it's still the same thing. Now, I marked this level, I did the analysis. So, and this is what they can do. So this is an A move, a B, and this is a C. Now, this one gave us, you can see where I'd drawn this before even this move. Once I saw that, okay, they have finished the leg lower down, I was looking for where C is going to be. And this is where it gets tricky from these brokers and all of that. The move from here down to this place, it's almost at 90. Because this one is almost at 90, I will take it for the last leg of C as a, running flat. So if it's going to be, sorry, a regular flat. So if it's going to be a regular flat, because it's a 90, if it's going to be a regular flat, I expect the last leg of C to be at either 100 or 123. And this is where I have my blue box to the downside. And so we saw the reaction. So I put one entry at this area, which is 100 and 123. It didn't touch 123 and they cut it short there. And the reaction occurred. When this one was going up, you will be seeing bullish candle. You say, they are buying because you don't understand structure. So before you know it, they force the price down. And now this is where they are. Back to this point, and not until we break here. Now, where are we going to exit here? Where we are going to exit here now, let me try and do something. Since the price had reacted in that area, based on this wave that we can see here, where are we going to? Where we are going to will now be a 141 of this from here to this blue, a 141 or a 123. So if we take it from here to this level, now a 141 is falling inside here, and a 123 is falling also around this area. So let me take this black off. I don't need it. I'm already on this wave, on this trade. Though I didn't keep it because it was not that. So a 141 is here, and a 123 is going to be at the edge here. It's going to be at the edge where I expect the first alert to go off for a buy. So that's where, so if we are going to, exit sell, it's around 98,500 or 98,200. So the price will react within that range of 98,500, 98,200. And the last place that price can be is at this 97,800 area. And that is what this one has given me. Based on the correction that I have in this middle, the correction in this middle is to finish. You don't expect, when you see this move, it is a corrective move. It is not a move to the upside. So it's better you begin to understand that. When you see this move also is a corrective move. When they want to change direction, this is not what you see. This corrective move is a pullback, and this also is a correction to the upside, not that they are changing the trend, even though they broke this trend line. So all you need to do is not to recreate your trend line and put it here. These are things you must understand. So it's a corrective move. This is a triad, a 4-hour correction. So a triad with A, B, and a C. And it's not a WXY. It is a WXY. Your B will not even get to 90 in this place. So it's an ABC move here. Just like we try to interpret on a higher time frame as well. Now, if you now want to, if this is what is giving us between here, now on the daily candle, let's see what it's going to give us. Just like we did on the DXY, to know where we're going to have a big A and a big B to go back to C. Let's go back to the daily candle. Now, daily candle, are we going to ever come to here, the area of a big C again? That is what we're going to see. But of course, we'll still see reaction before we'll take a chance. We'll still have to see a big reaction. Now, with that, let me try and slide this a bit down to expose this now. You can see this is where we are going now. This is the entire area that we mapped out based on the cycle. So the cycle blue box is still here. So this one can still run a bit deep into this area, the early area. So we need to see what happens there and how we move up to this area before we come down again. We need to see all of that. Reaction here, you can still see the push. The sellers are still in control. There is a correction in that place. So we still need to see how we come here. I still believe that price is going to go back up to the area of C, and that would temporarily weaken the dollar before the dollar gains strength again. So we need that divergence before we change the trend. That is what I'm saying. So now A2, this is where A started from the beginning of the end of 3.5 to A, which is A is here. Good. And that we now saw that it broke the correction of from here to this point, from here to this point. A started from here to this point. Okay, that is A, starting from that place. Okay, so you can see an A. So we are going to come from the beginning of that A to this. Our zero will be here. Then we'll now see a retracement. And the retracement, this is at 85, which has been broken. Made no sense of it. 90 is here. So that also has been broken to the downside. So now the price is, we are going to see the way it's going to come down here. So this is 141. 141 is where I have this second entry to go up. And this is 161 of it is where I have this red, which means that price is not expected beyond here. Once price goes beyond here, then it is with 5 that we are running to the downside. So now price reaction around this fringe still make it as a B to go to C. Then once we get a reaction around this zone, then we want to see how we can sell. I mean, how we can buy again. So that's what I'm saying. So, but for those who are selling now, temporarily we want to exit around this, between these two green, to exit, watch for reaction to buy, and if we buy, we're going to buy good to sell to this area. So that's what we are seeing now. So let me just, so it is not a WXY anymore. It is an A, B, C of a thing. So where B is there and we want to go back to C. That is what we get on this. That is Euro USD. The same thing is applicable, you know, and you can see how they can be funny. If you go to pound USD is the same. Now, pound USD, this is where the manipulation was really much. This one gives you more like a zigzag. It's more like a zigzag because this is to this point A, and to this point this is 76. If you measure the recovery here, it's 76 for B. And as a zigzag, again, it's 76 for B. Can either do you a zigzag, it can do you, it cannot be a running flat because a running flat B must project beyond A. So the option of a running flat is not there. It can be a regular flat. It can be a regular flat. So this is the edge eventually where they got to. Let's mark that. Most of the time, you want to get your end at 100. So if this didn't even reach the 100, it didn't reach the 100. So let's see. I'm just demonstrating it from here, from the beginning of A to the end of A, gave us a 76. You can see a 76 that can make it either a regular flat. No, sorry. Yes, it can still be a regular flat. Yes, it can still be a regular flat. That it can be a regular flat or a zigzag. So even though most of the time you expect your regular flat at 90, so it's more like a zigzag that you should really expect. So and the zigzag can get to 100 or 123 extension from here to end of A to beginning or end of B. So your 100 should be here and your 123 should be here. So it didn't get to 100, it was just few pips away from 100. So people will miss it. It's better you miss nonsense than you want to write with nonsense. You take off your highs because it doesn't, it's just like, and these are what brokers at times might do. It's just about 15 pips before it got there. So let them go away. You don't need them when they do that. Of course, you know how to project. If you're selling it already, you know where to get to. From this, you just get your 141 to the downside and you're out. Now, this is what I gave us again in the week. That's Euro USD, I mean AUD USD. That was what I gave us in the week. And you want to see how it worked out when I saw the correction. So the first one went up an A and a B, and this is also a zigzag. This is also a zigzag, and it's really perfect for it. You know, I gave us at 100 here, and it went up. We first saw reactions here, and it came down again. I knew with this kind of correction that they were doing here, they were going to break above here again, but then definitely it won't get to us, you know, 7,200. You know, it didn't get, so reaction was at just before 7,100 really, because it didn't really touch the edge of it. Let me just go inside the 1 hour for you to see how that correction went about. So it came down, and the first correction they did was this, perfect, and here. So let's see. You need to watch this video over and over for you to understand what exactly is happening. So sorry, from here, the beginning of A to the end of A, so give us almost like 76 here, which is like a zigzag. Then we were expecting like a correction of 100 or 123 to the upside for our entry, and to this point, back to this area, and our 100 was here, which we were drawing exactly at this point. We were drawing at 100, and the price at 123, it didn't touch 123. So if you want to go for 123 at times, you might not get it. So you might not get it. So 123 is just, so price didn't get that. So people might miss that. You know, that's why at times we choose 100. So in the case they want to do 123. So you can see the way I pulled it, that let's just come in here. So that one will not kill us. That will just be, so 123 really, it's about 25 pips. So if it's a daily correction, yeah, it's going to be more in terms of 123 to 100. It's going to be more, but it's just 25 pips. So, and perfectly, we saw the reaction here. Yeah. So the correction after this move, for us to know that they're going to break up again, and because the structure will prevail at the end of the day. So we saw a reaction. We didn't even get to my alert area, which is the red here. I done, you can see, and that was on it. So the price just came down sharp. You can see the sharp movement. So they're going to come down. So where are they coming to? At least we gain, say, 120, 114. If we're going to do 114, so potentially let's go on the daily. Let's go on the daily. So if you go on the daily to know where this is going to be on the daily, that correction started from here. And let me make this one a blue to know that that is where it's ending. Good. So now to this place. Now this is where a 161, 168 is going to be. 168 is going to be here. It's just a bit above it. It didn't do a deep pullback really, unlike other ones. So the 168 here and a 141, if you want to look at as an exit level, the 141 should be here around this area. That is the 141. So the 141 should still be around 68,200, though we gave 68. And the other one is at 67.9, which is around 68. But since he didn't do a cheap, I think the kind of correction here, it's different from what we are getting from Euro USD as well as the Pound USD. So we are still going to consider the move from here to here, which is the A, and that the only way this B is going to go, so is what we're going to look at before we eventually say, okay, this is where we are going to stop. From here now, let's do, before we have another question to the upside, if you're going to get that. So let's look at the possibility of this entire run here and the correction. At this one is 85. Now 85 is going to be at the base here. So this still looks perfect for us. A 76 here still looks like it. So at the edge here, it still looks like it. 67,800 is still a good place to stop. And 85 is another place that the price can be here, which is 67,500. So price can get to 67,500 really. And coming to this is another thing entirely. So there must just be a sharp move at the end of the day. So let's still stay where we are on AUD USD as our TP. That is what I'm just trying to say. Let's just stay where we are at 68 is still good for us on that. Now, the last one I'm going to touch on is the pound, so the USD JPY. USD JPY. USD JPY is the last one I'm going to touch. I said you should close it. Where do I move? Let me see if I have something there. Okay. I think I was using this to give us the possible correction that we can have. Of course, this one also I explained to us, the structure. I explained this ones to us in terms of the structure, as a possible 1 and 2, 1 and 2, and the 3 ended up here, and we're not doing the 4th correction. So I think I did that. So let me do something to mark the edge there. Let me make this one blue or a purple. I believe this one also illustrates the last correction here. And so now we saw this reaction, and you think it's, that's one thing. It's not a price action, because if you understand corrective format, when you see this movement, you say, oh, it's a candle. Further downside, what did they do? They move up. And when we saw this, the way they were dragging, I knew they were going to break the top again. So this is of no use, to anyone, because they are going to break above. They're going to break above and possibly break above this. That is what I can see now. That is what I can see now. So if we drag this one down, this is at 76 has been broken. The price is almost at 85. It has not gotten there. And the way it is, I think we're going to break above all of this, because there's not been any single reaction attempt from this pair. They might break this. They might break this, and it might end up being an A and a B, just like we are seeing on a DXY or Euro USD, then to come back to a C. So, but when they are done here is when they are done. So we can't force a thing. We cannot force a thing. So let me just go to where I have my chart. So we can't force a thing. I just use that to explain to you. We can't force a thing here. Let me go to 100. Where I have my chart. We can't force a thing here. So that's my chart here. So this might also end up being an ABC and not a WSY. At the moment, the option of WSY is still there. And I said you should close when I saw this. They are breaking out of this. You know, we thought that this correction of the B wave, if this one is an A big A, it may end up being a big A or not. So it will still be a WXY, but for now, let me still do as if it's ABC. We want to see reaction clearly before we go for it. We want to see what's going to happen around this area before we say we're going to go for it. So now, when we saw this move in the middle, when I saw this move in the middle, to extend to where B is going to be, with this move, we thought this A and a B to C, it's from here up to this level. We said it's almost 76, which is a zigzag. So if it's going to be a zigzag, we expected that what we're going to get we should see reaction between here 100 and 123 of the zigzag. Just stay with it. So the 100 was somewhere here. Let me use this. The 100 was somewhere here. It's just here, and the price broke above it. And the 123 is still around this area. So 123 is around that area. So if we don't see a reaction around this area, then there's no point. So, but it looks most likely that they are going to break. Once we don't see a reaction around this area, which is 138, let's say 181, 138, 200, around 200, 180. So if you don't see a reaction there, which I doubt we're going to see, we might just break above it. And in terms of that correction in the middle, but in terms of looking at the between A and a B correction, we have to look at that possibility, because A and a B gives us a daily correction view. The other one gave us a 4-hour correction view. So a 90 is here. So once you have a break outside of this red, then it is not a WXY anymore. In fact, once it breaks this pink here, it's not a WXY anymore. Then it's an ABC, and we can now find the possibility of where it's going to get to above, which is around 123 or 141 of a B, before we can see further downside. So then it won't make it correction of a 2-wave anymore, because we are thinking that this is a wave 1 and we are seeing a wave 2 to the downside before. So it might not be that. So let's wait and see what it's going to be. So this also potentially may do this. The 161, which may still be at 123 here. And 141 is where we have this wedge. Anything more than that, then forget. Anything more than that, forget. So But if you are holding, you might still want to hold to around 130, 138, 500. So that's what I can say. Once you go beyond 138, in fact, if you want to sell, you can just put your sell at 138, 180. So, and if it's 138, 180, and you put your stop loss at 138, 500. So once you even have a breach of that 138, forget it. They are going to break above. So, but it looks at the moment as still they're going to break above it. Then the only thing again is that with the way this movement is going, so you never can tell. You have to be studying the price action. So this still looks as if they're going to break above. We only have these few pips to decide what they're going to do to this one. If they have a price action around there, they're going to turn down and to sell. So that is what I can see with this. With that, I think I've come to the end of today's training. Watch the videos. If you have questions, you can ask me, and that's it.